Hey guys, hope you are all having a great day. Today we finally got the new inflation numbers, and though they were in line with expectations, they still spell disaster for the Fed's handling of the situation. We are going to discuss everything that came out, so buckle up. I will also link my morning video in the comments below in case you missed it. Today we discussed how a town in Idaho is planning to build tent cities after being unwilling to make the necessary changes to provide people with affordable housing. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Consistent with all the downwards trajectory this economy seems set in, the Consumer Price Index climbed a full 7% in the year of 2021 all through December, and then 5.5% after volatile prices were stripped out. To give a clear image of what was in the report, the price for used cars and trucks surged 37.3% in the year to December, with food growing 6.3%. Apparel rose 5.8% as well, and increases in energy and rent also kicked prices up into high gear. The report made mention of the new Omicron variant, which is infecting workers at factories, transportation companies, ports and warehousing, leading to serious shortages of products and parts used for making goods. With demand from American consumers rising, with no end in sight, shipping prices and fuel prices will also continue to elevate, worsening the problems. One thing that people need to keep note of is that the Olympics are going to take place in Beijing, and because of that, China has been sweeping lockdowns in order to keep the variant from spreading any further. As a result of this, more disruptions for supply chains are expected to occur. Businesses appear to have experienced little improvement in supply chain problems. So, where does this leave us? Well, economists are saying they aren't that worried about inflation, since the economy grew rapidly throughout 2021, creating over 6.4 million jobs in the United States. The real concern for them is centered in the Fed, with fear that it will be forced to combat inflation with sudden and aggressive interest rate increase, and rising the cost of borrowing, which they think would choke off economic recovery. This is a real and rational concern, as it lines up perfectly with the recent move by the Fed to move up the timeline for what could be as many as 3 interest rate increases starting as soon as March. The task at hand for policymakers is getting ahead of consumers' own inflation expectations. In this channel, we have spoken at length about the psychology behind inflation and expectations, and how the anticipation of worse things to come is actually worse than bad news itself, since people will stop spending, which would present an even greater threat for economic recovery. Think of it as a self-fulfilling prophecy. This is why Fed Chair Jerome "the Joke" Powell said yesterday, and I quote, "If inflation does become too persistent, if these high levels of inflation become too entrenched in the economy or people's thinking, that will lead to much tighter monetary policy from us, and that could lead to a recession, and that would be bad for workers." Forecasting where we will be, forecasters are already predicting that growth is going to slow down in the entire globe, and this would make the economy more vulnerable to the consequences of rate hikes. One part where I completely disagree with economists is on the optimistic outlook about employment. Unemployment did fall from 6.4% in January of 2021 to 3.9% in December last month, but this does not come anywhere near to the current problem that people are having with employment. A little thing, commonly referred to as the Great Resignation, is taking place all throughout the developed world, but particularly in America. More Americans than ever are quitting their jobs, citing poor wages, bad worker treatment, horrid benefits and poor career outlook. Over 20 million people quit their jobs during the second half of 2021 alone, and this number is set to grow in upcoming months. I want to talk about this real quick, because this will have severe impacts on how the economy shifts. Many have been wondering, why are people all of a sudden quitting their jobs at this pace? The answer is as simple as it is complex. The pandemic brought a moment of reflection for many Americans to think about their lives, where they are and where they want to be in the future. Though the Fed cites wages have grown, the growth does not come anywhere near what wages should be. Let it be known that baby boomers, or those born between 1946 and 1964, collectively owned 21% of the nation's wealth, compared to millennials who own only 3.2% around the same age. Across the board, age gaps, race and gender, political party and religion, people are rethinking their life situations, and they are picking up and leaving if employers are not willing to offer a fair and adequate compensation for work. Oh, and for the 3 people that will show up in my comments to complain about millennials, Keep in mind that it isn't just millennials quitting, it's literally everyone. When we think about job growth, as economists are seeing it, people are picking up and leaving, so the numbers on their report do not accurately measure the stability that we have as a nation when people are this discontent. I think it is time to reflect on wage stagnation, and come to realize that all the growth in the economy have only been rewarded to CEOs and the boards of corporations, with scrums left for the frontline and essential workers. Trickle-down economics didn't work, and we need to implement serious changes to the economic foundation of the country. Overall, economists liked certain portions of the review for 2021, but uncertainty rules their minds. Because the numbers were in line with expectations, nothing really was felt by the market. The road here, we had seen a lot of stocks and even cryptos fall down, but with these figures, which markets will most certainly view as fair and decent, I think we could potentially start seeing a rally upwards. Nothing big regarding AMC or GameStop came out today. Both companies have been eerily quiet, which is totally fine. I know they are both hard at work, and once they have something to show, they will. For now, let's now talk about today. The Fed submitted over $1.536 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 54% of the total volume today, while dark pool trades for GameStop accounted for 52% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing under 1% for the day. During the pre-market, AMC was running upwards, bullishly staying above the VWAP and breaking resistance over time. Upon market opening, AMC was dropped from 23.10 to 22.60. It did quickly bounce back, reaching 23.36 before falling back down again below the VWAP. After a small attempt at consolidating above it, AMC fell back down, this time breaking that earlier 22.60 support and instead reaching 22.05. After reaching this level, AMC starting moving up again, eventually running past the VWAP and reaching 22.93. It was unable to break past this resistance after 3 attempts, eventually closing as 22.72, slightly above the VWAP. As for what to expect tomorrow, AMC will find support at 22.50, 22 and 21.40. Resistance will be met at 22.90, 23.76 and 24. AMC did trade with less force than it did yesterday early in the day, but we are still within the same channel and trading margin we talked about on Sunday. It is possible tomorrow we could test some support at 22, so be mindful of that. Regardless, these levels are not so bad, especially if you are a buyer. GameStop traded bearishly, losing over 1% for the day. It began trading pretty bullishly during the pre-market, but once markets opened, GameStop fell from 131 down to 127. After a bounce that left GME retesting the upper band of VWAP at 131.32, shorters dragged this monster down to 126.45. Here, GameStop would stay trading around these levels for a while, with a lot of volatility, until it slowly broke resistance at 128 and ran all the way to 130 again. After reaching this high, GameStop started falling back down again, eventually closing at 128.06, below the VWAP. As for what to expect tomorrow, GameStop will find support at 125, 122.50 and 120. Resistance will be met at 132.50, 135 and 140. GameStop is in a downward trajectory, and we could be retesting 120 again very soon. This stock is way oversold, and the next run could see it shoot up just like it did a couple days ago when it easily ran to 175 with no problem. Keep in mind GameStop has a major catalyst with upcoming news regarding its NFT platform, and that once those news release, this stock is going to shoot up again. Both AMC and GameStop are going to have very bullish quarterly earning reports, so these current prices are a goldmine and great opportunity to add before they start shooting up as more institutional investors hop on in. And that is all I have for you guys today. Let me know what you thought of the video. I will link this morning's video in the comments below. I will be making and releasing morning videos tomorrow and on Friday as well, so be sure to check them out, as they provide a lot of insight about the overall economy on our lead up to MOASS. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.